Great to have you with us. I've been speaking to a lot of your colleagues over the last couple of days, and I feel as though the mood, the outlook for the European economy is just a little bit better than it was a couple of months ago.
Well, first of all, the global economy is not doing very well with respect to last year. It is a clear slowdown. There has not been a major change since the last projections, January, October. Advanced economies are doing a little bit better, but they have slowed down significantly. What is important is not really the expected rate of growth this year and the next. It is the fact that there is a wide uncertainty around these projections, and especially that the risks are clearly on the downside for a number of reasons.
Do you still see the risks on the downside to the European economy as well?
Yes, also the European economy. At the global level, we have a number of factors, obviously, that we have to take into consideration. Certainly, the uncertainty related to the war is not ended. It is unceased war. And these may have repercussions in the coming months that we really have difficulty in projecting. The second is that there is a rising concern at the global level because of the somehow risk of returning to a division in blocks. Thirdly, we have this financial turbulence that is not really strongly dependent from what happens in Europe, but there is contagion, there are risks that we have to take into account. Fourthly, we must still be very cautious on the bottleneck side. Obviously, we have less concerns on the health situation. The improvement also in the deliveries is there, but these risks are there. Inflation is still stubbornly high on the core side.
I'll get to that. Let me just ask you, because you mentioned financial contagion. Italian banks seem to be in a good situation, though, better capitalized, good liquidity ratios. What is your read on the health of the Italian banking sector right now?
The Italian banking sector is doing okay. The European banking sector is doing okay. In terms of the turbulence you have seen, it is most related to business models of the particular banks that have been affected. This is idiosyncrasy, but there might be contagion for some other reasons. Social media work in ways that are very difficult for us now to understand. We have to do more. In Italy, the capital position is solid. The liquidity is sufficient, the profitability is good. At the same time, we have done a lot of progress, our banks have done a lot of progress on the non-performing loan side, really substantial. It has been done also through a substantial effort in improving the market for these loans, for the disposal of the loans, and the transparency and information related to that.
A lot of that also, what happens with non-performing loans, is a function of what happens with the Italian economy as well. So that's something of note. I want to turn back to what you were saying about inflation and the fact that it has been so sticky. Core inflation has been so sticky. The last few prints out of the Eurozone have been moving upwards, not downwards. Does that not mean that ECB have to stay the course with fighting inflation and keep with hiking interest rates?
First of all, headline inflation has been gone down substantially. This is mostly due, or almost all due, to energy prices that have been really skyrocketing, going very, very high and then going down substantially. And the increase that we still see in a year-to-year core prices is also to be considered as a lagged reaction to the increase in energy prices that taken place during the course of last year. Now these prices have fallen substantially. So the critical issue, what we call second round effects, is whether final goods will reflect this reduction in energy prices. If they don't, this implies that profit margins increase. If they increase, then monetary policy will do what has to be done. But uncertainty is very high. and we have to be very cautious given the number of factors I mentioned before. Therefore, the direction has to be clear. I have issues with the speed and the size of possible movements that we have to decide only meeting by meeting on the basis of the information we gather. Obviously, there is something that we have to consider, whether it's better to risk on the upside or risk on the downside. I think this is something that we should not really consider. I think we have to show that we are determined, but we are also patient.
Well, you're considered to be one of the more dovish members of the committee. In your opinion, are we getting close to the point where the ECB perhaps should pause and wait, see the impact of all of the previous interest rate hikes, the impact that that's going to have on the economy?
First of all, I'm not at all reflected in that kind of description. If you looked at what I've done in my lifetime and what I've written about inflation and so on, I'm very worried about inflation, as I was very worried about deflation. I mean, so we need to have stable prices, which we define more or less an inflation of 2% in the medium term, symmetrically. Now, what I'm saying is that if the data tells us that there is still difficulty in bringing core inflation down, we have to be very calm, patient, and we have to keep doing. Then we have to decide when we will consider having reached our medium-term objective. A medium-term objective is not something that we observe day by day. It is something that we gauge from a number of determinants. And for the time being, we have not. So this means that obviously we have tightened, the credit conditions have substantially tightened, and as a matter of fact, if you look at the credit data, they show that the rate of growth has gone down from over 10% in the late summer to zero and negative in real terms now. So we are tightening. We have to wait for the lags that monetary policy takes.
Yeah, I spoke to Pierre Wunsch, your colleague also from the National Bank of Belgium, and he suggested that perhaps there is an 18-month time lag between the decision itself and the full transmission to the broader economy. How do you think about time lag?
I have similar ideas. It is 1 to 1 year and a half. This is more or less before you really observe the effects on the real economy. But it is still uncertain because in the meanwhile many other things happen. So this is the, say, baseline. But then we have to really wait and see all the other factors that matter.
Final question for you on the size of ECB's balance sheet. Now there is the goal is to start reducing it. Could you imagine a situation where the reduction of the balance sheet becomes the primary tool and the ECB stops leaning on interest rate hikes?
Well, we have said that it has to be in a well-defined way and measured way. So if it is measured, it is well-defined, expected, I don't see really major problems. Obviously, if it is abrupt, then all of a sudden you need to have sudden measures, important measures for increasing the liquidity of the system, then the risk is high that you have to go back as it happened elsewhere, and I don't think we should.
Governor, thank you very much for your time.